What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I wanted to show you exactly how my Twilio earnings play worked out and how much money I actually lost on it, okay? So in my video about Snapchat earnings, I told you about how buying a Strangle for earnings kind of works only half the time. And the risk reward is that you either can 5 to 10x your money if the stock shoots up or drops a lot, or you could lose about half the value, okay? So that was really the high risk, high reward kind of a strategy that I typically use for earnings. I don't use it too often because, like I said, it's kind of a gamble always. You never really know how the stock is going to move. Even if they really beat earnings and they are very positive about revenue guidance and things like that, the stock may still not move much, or they may even drop because there was one particular thing during a conference call that could have disappointed investors. So it's always going to be a gamble, guys. So I always let people know that this is a very high risk. But I wanted to show you quickly how much I did actually lose on the Twilio earnings play. So let me go here to the history. You'll know exactly how it worked out here. So on 26th, which was the day that Twilio announced earnings, I got a Strangle here where I bought the 340 call and a 285 put expiring on November 6th, and I paid a total of $14.75 for it, okay? Now, Twilio did drop a pretty decent amount after earnings, but thing is, because these are fairly far out of the money puts, and there was a lot of IV associated with it before earnings, because of the IV crush, even though the puts went up a little, they didn't really go up a whole lot, okay? So I ended up selling the put for $9.45, which, based on the fact that I bought the put for $7.06, it's still considered a $245 profit, but the calls got destroyed because I paid $7.69 for the calls, but I only sold it for $99, okay? So if you do the math, this was a net loss of about $431, okay? So in my mind, whenever I place these Strangles for earnings, I'm mentally prepared to lose about 50% of the value, even if the stock doesn't really move as much as I want it to move. But the risk reward that you see here is that with Snap, you know, even though I lost $320 in the puts, the calls went from $560 to $3,450. So overall, it was still a $2,500 profit, even though the puts expired worthless. So that was almost a 5 or 6x on that Strangle. But in this case, it was a loss of only $430, which is just about a 30% loss, okay? So that's what I want to show you quickly about Strangles and how they work out for earnings. If you're going to play it, just be completely aware that you could either lose 30 to 50% of your value, or if it really shoots up like Snap did, you could 5 or 6x your money, okay? If you're not mentally prepared for that kind of a risk tolerance or a risk reward ratio, then I would highly recommend that you actually stay away from earnings. It's a lot safer to just sit on the sidelines and potentially play any continuation on the next day, okay? I hope you guys found that helpful. If you did, please do smash the like button. Leave a comment below if you have any questions, and be sure to subscribe if you haven't already, okay? Quick reminder about Discord as well. We have almost 350 members now, guys. It's been pretty active lately. A lot of people, I think, are benefiting from it, so I'm really excited about that. So if you haven't joined yet, please be sure to join Discord. And in full transparency, getting access to Discord is going to be free, and there are a lot of channels that you can access, but there are certain additional benefits that patrons get, some exclusive channels and more details behind it. So I want to be fully transparent about that before you join. Okay, so that's all I wanted to share with you guys for today. Have a great rest of the day. Take care.